Welcome back to Sunday Funday, where we review our M1 Finance Growth portfolio. In today's video, we are going to review our deposits and our purchases. As you can see, we are currently down in this account. This is probably the second time, well, it's still the first time I think that we're totally down in the account, but you can see that the account value is only $3,056. In this account, we make pretty much regular deposits. Just every once in a while when we get paid, we deposit some money. Years ago, I decided to kind of dollar cost average into the FANG stocks, which basically is Facebook, Amazon, Netflix, and Google. And then we also included Berkshire Hathaway in there. And then in the past, it seemed like those stocks have always pretty much went up because they are all part of the major indexes. So as everybody dollar cost averages into their mutual funds and index funds and ETFs, it just kind of adds to that. But recently, the stock market and everything has started to make a downturn, and there's been a few, I feel like, overreactions to some earnings, earning reports, and a lot of the stocks have came down a lot. Like Netflix is like half of what it used to be. Actually, it's like a fifth of what it used to be. I believe at one point Netflix was up over $600, and I was thinking to myself, man, I should just sell out of that, split that $600 up between the other four stocks, and just call it good, because that seemed like it was really, really overpriced as far as the stock goes. But I didn't. I just held on, and then one day it dropped $200, and then kind of fluttered around for a little bit, and then the next day it dropped another $100, and so now we're sitting $600 in the hole on that one. Also, recently, Facebook and Amazon both have come down, and Google's actually came down quite a bit too. We were up 50-some% on Google. But now we're down 50-some% on Netflix, and down 27% on Amazon, and down 24% on Facebook. Berkshire's still holding in there strong. But same thing, it's just, I feel like it was an overreaction. Yeah, the price probably should have went down, but I think a lot of people sold out, and a lot of people's stop losses got hit. And that happens with all the electronic stuff and the computer generated trading apps and all that. Everybody can say, well, if it gets to this price, I want to sell it so I don't lose money, or I'm only willing to lose this much money. And I think the few days that the stock did drop, it really hurt the stock price because everybody's sold out, and who knows if the index is sold out or their stop losses got hit. So for the month of May, we have not deposited any money yet, but as you can see, we deposited $300 in April, and we were able to buy, I think we got stuck buying Netflix is what we got stuck buying because it dropped so much. I think the one time I had to buy $100 in Netflix. Yeah, the one time I bought $63 worth of Netflix, and the next time, because the price dropped so bad, I had to buy another $100 in Netflix. I think a couple bucks, the one time $30 went to Google because it went down some. So we really haven't bought a whole lot. I think that's the $300 though gone. Yep. But hopefully some of those stocks will recover. I am thinking about, I'm going to continue to dollar cost average. I really wanted to dump a bunch of money in here to try to take advantage of trying to get a full share of Google and Amazon before the stock split. Not that it really matters, but I feel like I would feel better about it if I had a whole share of each of those going into that. And right now, with the prices being down, it would be nice to get a lot of money into those. But as you can see, if I was to put more money in, it would just buy more Netflix, and I don't know if I want to do that, but it probably is a good time to add to it, as it is down so far. I mean, if you figure if it gets back to $421, which more than likely it will, I mean, that'd be a 55% gain. So, I mean, that's not too bad. So we'll just keep putting chunks of money in. Hopefully by the end of the month, we'll get a couple $100 more in there. I would like to have $6,000 into this account by the end of the year, so we got $2,000 more to go. But this is just a fun little thing we've decided to do with trying to dollar cost average into basically growth stocks that don't pay dividends, to see if that works out better than dividend paying stocks. Hope you enjoyed the video. Remember, this is Sunday Funday, where we review our Webull dividend portfolio, our M1 Finance Roth IRA, our Fidelity Health Savings Account, and our M1 Finance Growth portfolio. As you can see, we are currently down on 50% of our accounts, basically. But if you look all together, with all the investment accounts together, you can see that we are still currently up $2,300, and we have a total return of almost 11%. So still doing pretty good overall, and I still feel like we're further ahead if we would have spent this $44,000 on something else. And to me, it probably would just be sitting in the closet or in the barn somewhere. So we're putting our money to work to see how much money it can make us for 20 years from now or so. But remember, this is Sunday Funday, so if you do want to stay up to date on what we're doing with our money, make sure you hit the subscribe button. If you want to watch more investing videos, make sure you click the link on the screen or over in the sidebar. Thanks for watching.